The global financial markets have just witnessed a major shakeup, and if you haven't been paying attention, now is the time to take notice. A groundbreaking artificial intelligence breakthrough from China has sent shockwaves through the tech sector, erasing more than $1 trillion in market capitalization. The revelation that China's AI is not lagging behind the US, but is, in fact, ahead has left investors reeling. Let's break down exactly what happened and why this could mark the beginning of a major market shift. China's DeepSeek AI. A game-changer for years, the prevailing belief in the US was that China trailed behind in AI development by at least 2 or 3 years. However, last week's startling discovery shattered this illusion. DeepSeek, a Chinese AI platform, proved to be not only competitive with, but in some cases superior to OpenAI's ChatGPT. This advancement didn't come out of nowhere. China has been investing heavily in AI research, with institutions like Tsinghua University and Beidou leading the charge. The development of DeepSeek is a testament to China's focused and strategic approach to AI, utilizing a mix of public and private funding. While U.S. firms rely on massive data centers and extensive computational power, DeepSeek operates more efficiently, leveraging novel algorithms that require significantly less energy. Experts believe this is just the beginning, and China's AI sector could surpass expectations in other areas, such as quantum computing and autonomous systems. The broader implications extend beyond business. This technological leap could reshape geopolitical dynamics, with China establishing itself as the AI powerhouse of the future. Market mayhem. A $1 trillion meltdown. The first casualties of this market upheaval were the biggest names in the tech industry. On Monday, U.S. stocks nosedived, with traders rapidly pulling out of the AI sector. The S&P 500 plunged by nearly 1.5%, while the Nasdaq, heavily reliant on tech stocks, suffered an even greater drop of over 3%. The total damage? A staggering $1 trillion wiped out in a single day. This type of financial bloodbath is rare and reminiscent of past crashes, like the dot-com bubble burst of 2000 and the 2008 financial crisis. What makes this scenario even more concerning is that the drop came after years of consistent market growth, particularly in the tech sector. Companies like Microsoft, Google, and Meta had been posting record profits, leading many to believe the AI boom was unstoppable. However, the sudden decline exposed vulnerabilities, forcing analysts to question whether the AI industry was built on solid ground or merely inflated by speculative investments. With many hedge funds and institutional investors losing billions in just 24 hours, the market is now treading carefully, waiting to see if this is a short-term correction or the beginning of a prolonged decline. AI's open source revolution. One of the most alarming revelations was that China's AI technology is open source. This means that instead of monopolizing the advancements, China has made them accessible to everyone. The implications of this are massive. Any company, institution, or even individual developer can leverage this technology without paying hefty licensing fees. This starkly contrasts with the U.S. approach, where companies like OpenAI, Google, and Microsoft maintain proprietary control over their AI developments, requiring substantial investment and vast amounts of energy to keep their systems running. The efficiency of China's AI, coupled with its accessibility, has further exposed the vulnerabilities of the U.S. tech sector. The ripple effect: tech giants crumble. The AI-driven panic sent shockwaves beyond NVIDIA, rattling the entire tech industry and dragging down the Magnificent Seven stocks. Microsoft, despite being a major AI investor, fell by 2%, while Alphabet, Google's parent company, took a 4% hit as uncertainty loomed over its AI-driven business model. Oracle suffered the most, plunging 14% and erasing gains from a recent AI infrastructure deal, while SoftBank tumbled 8% in Tokyo trading, reflecting the broader unease gripping the tech sector. Adding fuel to the fire: U.S.-China trade tensions. As if things weren't already turbulent, former U.S. President Donald Trump added to the chaos by announcing new tariffs on semiconductor imports from Taiwan. Given that Taiwan Semiconductor Manufacturing Company is one of the world's leading chip manufacturers, this move further exacerbated fears in the tech industry. Taiwan Semiconductor Manufacturing Company itself saw a 13% decline in stock value, while Broadcom, another semiconductor giant, dropped by 17%. The geopolitical tension between the U.S. and China, particularly in the tech space, has already been a contentious issue. With China's AI dominance now evident, The U.S. response remains uncertain. Will there be more tariffs, restrictions, or an increase in domestic AI investments? Whatever happens, the tech landscape has been irrevocably altered. The AI bubble. Are we on the verge of a major crash? A key takeaway from this situation is the realization that the AI sector in the U.S. has been experiencing irrational exuberance, a term famously associated with the dot-com bubble of the late 1990s. The AI gold rush saw investors throwing billions of dollars into companies promising revolutionary technology, regardless of whether these firms could deliver on their promises. Now, with China proving that AI can be more cost-effective and energy efficient, the inflated U.S. market is beginning to deflate. The big question now is this just a correction, or is it the beginning of a major crash? Historically, when markets experience rapid growth driven by speculation rather than tangible value, a collapse is inevitable. Many experts believe that we are currently witnessing the early stages of an AI bubble burst. Some even argue that the situation is worse than 1929, the year of the infamous stock market crash that led to the Great Depression. What comes next? While some investors may see this downturn as an opportunity to buy the dip, the bigger picture is far more complex. The decline in tech stocks could lead to a ripple effect across other sectors. Many 401 retirement plans and investment portfolios are heavily tied to tech stocks, meaning everyday investors, not just billionaires, stand to lose significant money. Additionally, in past financial crises, governments have often stepped in to bail out major industries, but these bailouts typically favor large corporations rather than individual workers. Will the U.S. government attempt to stabilize the AI sector with new subsidies or policies, or will this be the start of a prolonged decline? The billionaire exit strategy. One key indicator that a market crash is imminent is when insiders start cashing out. Recently, some of the wealthiest figures in tech have been quietly offloading their stock holdings. Selling off billions in stock isn't just a coincidence, it's often a sign that they know something the public doesn't. This pattern has been observed in previous market crashes. When the ultra-wealthy see the writing on the wall, they strategically sell off portions of their holdings to secure profits before a full-scale collapse. If this trend continues, it could be a clear warning sign that the AI bubble isn't just deflating, it's about to pop. A ticking time bomb? The recent AI panic serves as a wake-up call for investors, policymakers, and tech companies. The U.S. tech sector is not invincible, and over-reliance on speculative investments can have dire consequences. China's AI advancements have not only exposed vulnerabilities in the U.S. market, but have also challenged long-held assumptions about global tech leadership. The next few months will be critical. If the market continues to tumble, we could be looking at an economic downturn comparable to the dot-com crash or even the Great Depression. With billionaires hedging their bets and global AI competition heating up, one thing is clear: the AI hype train may have just hit a major roadblock. That's all for today's video. If you enjoyed this analysis and want to stay ahead of the latest developments in AI, tech, and finance, make sure to hit that like button, subscribe, and turn on notifications. And don't forget to share your thoughts in the comments. Do you think China has already won the AI race? Or is this just another chapter in the ongoing tech war? Let's discuss.